What's up traders, welcome to Failure to Displace. This is just going to be a quick session review of the London session on EURUSD. If you haven't seen earlier, the last video that I released was a live stream of this trade that I took, taking out some highs. We closed out just as the silver bullet session was opening up. And the aim of this video is just to follow up on price action after we closed out on this trade. We can see it was a good decision to close. We didn't reach the full 3R, which I initially thought we might do. However, we did take the levels of liquidity that I had highlighted. So this is just going to be a review of the silver bullet session, which offered a brilliant trade yet again. And then the last macro in the London session, which was a consolidation macro, which again generally happens after we've had a large displacement. So macros that follow a large displacement often end or begin a consolidation period. So as we closed out of this trade, we had 3 levels of liquidity highlighted on our screen, which was the Thursday high from the 29th of February. We also had a session high from the New York PM session on the 27th of February, and then we had the New York high as well. So in that last video, if you haven't seen it, do check it out. I'll pop a little banner up in the top corner there so you can click it. You can see that I did mention there was a cluster of liquidity here, which was giving me a bullish bias coming into the first macro. So our trade into the first macro was a pullback into optimal trade entry, so into a discount of this range. So we had a consolidation and then a bit of a breakout. We had a pullback into optimal trade entry, which was also into an inversion fair value gap on the 5-minute. So we had a 5-minute inversion fair value gap here. Price pulled up into optimal trade 786 area, found support at this inversion fair value gap in macro number 1, which gave us the trigger to begin looking for our long trade. We had SMT with the Dixie, so we put in new lows on the pound, on the euro. However, on the Dixie, we created higher lows. So again, we came back into the inversion fair value gap. So the same fair value gap was apparent on both charts. This is an inverted Dixie chart. So we are looking for these to match if they are correlated. And we are looking for a discrepancy if we're looking for SMT. So we can see lows on the euro, higher lows on the Dixie. This gave me the trigger to again look for my macro entry, which is an engulfing candle over an inversion fair value gap. So we achieved that at 239. So we created a fair value gap, consolidated underneath that, and then had this large engulfing candle, which was closed over at 239. Entry was on the close of that candle. Low hanging fruit where we went break even was taking these relative equal highs, moved the stop loss to break even. As we approached this level, we had bearish SMT with the Dixie. So the Dixie had swept these levels. However, the euro was failing to take them. So at that point, I did close 75% of the trade early. So I didn't let it run to the full 2R, which was this area here. After a small consolidation, price did come up to reach our targets. So these were the ultimate targets for the trade. Those are the 3 session levels of liquidity that were clustered together. And you can see price aggressively ran through those at the end of the macro into the open of the silver bullet hour, where we had a lovely ICT 2022 mentorship entry. Swept the highs, break of structure, engulfing candle with fair value gap for an entry here. This was also a textbook SMT. So at this point here, we failed to take new highs at the here, put in a high, a low at this point, whereas we were creating relative equal highs here. We can see we're building SMT as we've swept liquidity on the euro. We had 2 inversion fair value gaps. So we had 3. We had a fair value gap here on the euro, here and here. This large engulfing closed over all of those. So the entry would have been at the close of this candle based on my entry model. Stop loss above the high. And then again, we'd identified earlier, we had relative equal lows here for a target. So again, if you watch the previous video, I mentioned that price could sweep these highs and then come back for these relative equal lows into the Asian session. So my targets would have been those relative equal lows. We did in fact come down to test the previous New York PM session macro, which up until this point had been untapped. So we took out the Asia lows into the PM session macro, again netting a good 2.5R. And then we're going into a consolidation phase now into this next macro. So overall, I am bullish for the day. So I did have bullish bias, expecting this swing high to be taken here. So my daily bias, we had an engulfing candle on Thursday, and we were delivering from this large bullish fair value gap. This was the swing high that I had my eyes on, so I was expecting a draw to here. My only concern that I mentioned from the previous videos, we haven't put a bottom wick in on this daily candle yet, so it would have been nice to see a reverse down here first, so manipulation lower before going for the high. So we may not take that high, to be fair, because I do feel that we do need a bottom wick. From the open, we've just driven straight higher, which is unusual. You will see as you look at most days previously, 99% of daily candles will have a bottom wick and a top wick. So the fact that we put in a top wick thinks maybe into New York we may come down and put in a bottom wick. It'd be very rare that we will just drive straight up from the open. But that was the initial bias for the day anyway, so I had a bullish bias going into the day, and we can see we are currently delivering higher. But given the fact that we've not got a bottom wick, you may see a sweep of London highs into New York and then a drive down, filling our new week opening gap and giving us a bottom wick that we would expect. And so that was analysis from the macro number 1. Macro number 2, which is a consolidation, no entry at this point, and the really nice silver bullet trade. So again, all last week, silver bullet was perfect. Solid trades in silver bullet. And again, it's providing the best of the trades today as well. So the silver bullet trade was a much better trade than the macro long that I actually took this morning. So I hope that was useful. Just a quick review of this morning's session, follow on from the live stream that I released earlier to see how price progressed, and just also confirm why it was worthwhile me closing. So I did close the trade out in full at the end of the macro because I didn't see the displacement higher. So instead of holding for a full 3R, I closed everything out at 2R. And that was a wise decision because the silver bullet did take us back again, sweeping some liquidity. If you found this video useful, please do leave it a thumbs up. I would really appreciate your support. Comments and questions, leave them down below. And if you're enjoying this kind of content and want to see more videos like this one explaining how I'm trading the London sessions, then please do consider subscribing. It'd be great to have you on board. Thanks again for watching, and I hope to see you again in the next video.